It explicitly accepts what they're calling a tolerable level of harm.
Which is just a huge change in mindset.
The complete rupture with the post-2008 era. Then we got the colossal 450-page crypto rulebook CP2540. It moves the UK well past just AML checks and into a full prudential regime. And third, the Bank of England gave us a deeply divided, really nail-biting interest rate decision.
So a revolution in lending, a new rule book for a whole asset class, and economic instability. Let's start with that philosophical pivot on mortgages. It sounds seismic.
It is. This is FS 256, and it's the biggest reform since the Mortgage Market Review back in 2013. For years, the default setting has been, eliminate all risk. The FCA is now openly rejecting that. The key quote is that regulation should enable informed risk to be taken, not eliminate it entirely.
Okay, let's just stop there for a second. That sounds great in a press release, but
Yeah.
if the FCA accepts a tolerable level of harm, who defines what's tolerable?
Well, that is the central tension, isn't it?
And how do banks stop themselves from just pushing right up to that new limit?
The onus is now entirely on the bank's own governance. The tolerance is conditional. It might mean accepting a managed increase in arrears, but only if the payoff is a better consumer duty outcome.
Like getting first-time buyers onto the ladder who were previously locked out.
Exactly. But the banks must be able to prove it with really robust data. It's a green light for innovation and affordability models, but only if the governance is flawless.
So the regulator's saying, we trust you, but you have to prove it. It shifts the accountability.
It really does. And we know what's coming next.